Hey guys, how are you? Yes, reset sniper in some senses, market sniper in another, and also crypto sniper in a third. So this is kind of a catch-all. I'm not even sure which channel I'm going to push it down. So this video has a number of themes. It's going to be titled Why the Next Major Market Cycle for Traders will be generally to the short side, and those that do not know how to short will not be successful in trading. In fact, shorting markets is one of the final shoes to drop in the trader's development. Most can make money when they're seeing expanding going up market. They can learn, they can get in, they can sometimes develop methods to a certain degree and be comfortable with something that's largely moving up, like we've had on equity indices in the US repeatedly after major sell-offs, the buy the damn dip concept. The problem for many traders comes is when markets congest, go sideways, chop around, are directionless, or when in fact they sell off, sometimes abruptly, sometimes suddenly, grind for a while, sell off. Traders generally are not sure how to short, and it's one of the last shoes to drop. What method do you base? Some might, recognize a bear flag, do this or do that, and technically see one or two basic patterns like head and shoulders, but generally that's limited to trading a double top, a head and shoulder, or a bear flag. Now I'm going to stop right there and I'm going to come back to this discussion because I wanted to rewind and take you to a Real Vision vid that I've just watched. One of my guys put it in front of me, and it's nothing new in this for me, but it was just quite nicely narrated, and it reminded me of many of the key core concepts and refreshed certain aspects with me. So we are at multi-generational highs on equities in terms of PEs, all forms of measures. We are at multi-generational extreme highs by measure in terms of these markets. We are also at extreme lows of interest rates that we've never had such a sustained period thereof. So money's never been so cheap. Yes. Money's never been so cheap. Corporations have never had no reason to develop new product because the return is so low. A better return is just borrowing super cheap money and buying back your own stock. That'll goose your stock price better than new plant, new product, and investing for the long cycle. So we've gone away from real value add concepts. There's certain big fat oligarchs that will develop a smarter smartphone and put a faster chip in and do this and that. But given all of these things, we're at a demographics, and it's about demographics. Watch Harry Dent and have a watch of Raol in the same space. This is about baby boomers. Now, Clinton supposedly was the genius because he was a Democrat, a left-wing politician that returned a surplus. In fact, no, he wasn't. Presidents have very little to do with economic success. Yes, they can break the economy eventually, but broadly it's by entrepreneurship, culture, cycle, etc., that will determine what kind of economy a president had. Clinton was in charge when the baby boomers at their highest tax-paying, most productive age of 47, universally through the life stage cycle, were at their prime. So he had the massive pig in a python. In fact, it's not even a pig in a python, it's the King Dong warthog, because it's one gnarly, hairy-ass pig that this python has gone and swallowed. And where the python represents the Khazarian economy in true snake-like form, it is completely and utterly constipated, lethargic, and suffering from indigestion. And it's going to take a whole bunch longer to get this King Dong warthog walking through the other end. It's got to be broken down, and it's going to take some digesting. And this is your baby boomer generation. And they are now in the state where they are net detractors. They require welfare payments, they require Medicaid, they are going to be spenders mainly on healthcare now. So they've gone from being 47 to now they're in the average I think it was about 20 years ago that Clinton was in charge. They were on average about 67. They no longer is the early ones retiring. You're now in the midstream, the bell, the fat part of the curve is starting to ramp. More and more are retiring at an ever faster rate. So the demographic effect of this is that these guys that have had multiple booms provided for them to cash out their wealth, when you look at what money they have, and Real Vision does a real good job of how much money in home equity, cash, watch the video, you get, oh, it's not too bad. Then you cull the top 1% out because we've had a complete hollowing out of the Gini curve. Instead of a line like this where income distribution is relatively evenly distributed through the top incomes, it goes something like this, and then it goes parabolic when you get to the top 1%. When you eliminate the top 1% and get the truth of how much the average American owns in terms of bonds, equity in his home, etc., there's a lot of conclusions that are real tough that have to be come to. People have insufficient money for their retirement. So what's going to happen is they're going to sell their homes for the equity in it. Park homes are going to go up. More people are going to be camping out in park homes in what would be called lower subsistence type retirements. The discretional Generation X, Y, and the millennials that have all come behind don't have the same income, never had the same participation in booms, and are going to be left with huge debt. And the US has essentially got a perfect model in the form of Japan to follow. And that is an epic increase in government debt, because the government's going to keep having to hold things up and maintain the charade. So they're going to be paying out on healthcare, paying out on this, paying out on that, getting much less tax. They can try screw the next generation so hard with tax on this massive debt bomb that they've created, maybe, but they will actually throttle the economy, throttle the smaller little group of people that have got all these pensioners to hold. I remember in the old days there was a stat such as 15 working age people held up one person, and now it's going to be dropped down to about 3 working age for every pensioner. And it's just not enough. And you add to that the life expectancy. So people are living longer. You used to retire and have 5 to 10 years, if you're lucky, 15. People are retiring at 67 and falling over at 97. That's 30 years. And many of them on healthcare and other welfare state requirements. So here you're going to have an environment where a lot of people are going to realize that they've undersaved, and you're also going to have more of the baby boomers trying to hang on to some work because they know they've undersaved and they don't have sufficient money. What is the effect of all of this? What you're going to have happen is the first generations that don't have it so good, less of a consumption economy in the States. It'll still have some things that'll sell. New cars, this is one of the things that's highly discretional that'll fall a long, long way down. Debt, people will be too over indebted, people will take less debt. The financial services, thank God, will shrink. That's going to be awesome. The retail financial services, I don't think we'll ever get shot of the investment banks and their proximity to the central banking cartel. They're far too closely associated and required for their financial engineering that does so well for us all. But you will see retail financial services reduced because people, will have less money. There will be less reasons to have hedge funds and all of these things. People have been sloshing around in liquidity, but it's come at that huge debt increase, and the debt is going to have to go far more hyperbolic. To maintain this contraction, which is very deflationary on the stock markets, when we get our next downturn, it could be really, really brutal. On the bond market and all of that, the central banking cartel, the regime, are going to continue with their usual tricks because that's all they have. Forget about tools. We have tools. Open up this kit and roll out, and it's like the Matrix with racks of different guns and everything to pick and choose from. They have one tool, and it has many ways that it can be brought to bear and manifest, but it's essentially proliferation of further easy money. So as we are deflating, with all these assets deflating, they are going to become buyers of last resort, and they're going to print and release more money and build ever expanding debt shenanigans that will take the US to Japanese-like levels. By the way, they're already well through Japanese levels if you include Medicaid liabilities that are not kept on book. They're going to be funded from future generations and welfare anyway. They're through, by Boston professors' calculations, 600%. So 289% on Japan is actually not that high. But let's leave those things off balance sheet. They will, for now, although they should definitely be accounted for, and they haven't been provided for, there is no savings account for money for those people in pensions. They will proliferate money that will continually to devalue the money in an inflationary sense. So the game is going to be, when we contract and there's this much less consumption and people are going to hang on to cars for 10, 12 years nowadays, they're not going to get into debt and buy a truck that's going on nearly $85,000 when you count the finance on it over 7 years. That's, my father paid off his home in 7 years. People are buying GMC trucks on 7-year HP agreements where they still owe 30, 40, 50% of the car once they've been paying this mortgage for 7 years. So this level of financial engineering is going to come to an abrupt halt, and people are going to realize they can't afford that. People are going to go back to holding on to cars for longer. You don't want to be in the new car business, as this Real Vision vid shows. There's certain industries that are going to get real backlash. Of course, the medical has been pumped at the cost of farmers, and the inflation in America for the warthog in the python has gone to the moon because they've got plenty of customs, and they've got Obamacare and institutions all having to pay for it. So that has been the new inflationary spot, dealing with all these getting old folk with their getting old ailments will be the new focus, and they will be regular voters, so they will always be looked after. You know, the oldies that show up, never mind the college kids that, you know, are all passionate and shout and scream but don't go vote. Brexit found out plenty about that and blamed it on the elderly spoiling the young generation. So we will hear plenty about generational arguments. So these other generations that will be following up don't have the ability to buy these overpriced assets. They won't have the same ability to take credit to the same degree, and these assets will stagnate in value. So real estate market, a lot of these things, as boomers become net sellers, and they could be dropping to lower cost home solutions, hence why they mention park homes and simple dwellings that can be put up on a piece of land quite tightly, and people can live in a kind of sub-economic suburb not too far away from their local hospital. People drive less, so the Rockefeller tax, as you get older, people do less adventurous touring, and of course they don't have jobs and repping around to do, and flights take it out of you, jet lag, etc., etc. So you're going to have a contraction as these people are slowing up. And this is going to affect all asset classes. Then you add the ridiculous over leveraging and the extreme low interest rates. Now, I don't personally think there's really a scope to ever really raise rates again. It's not feasible to any significant degree. Yes, we've just had a rate rising cycle start, and everyone going, I called the transgenerational bottom in the bonds. No, you didn't, mate. It's never going to go back to 5 or 6%. It's a rally until we shit the bed again. Then it goes right the way back down to whence it comes. How many more false dawns do you think you're going to get before you wake up that this bottom is going to be a very consolidatory chart bottom? Every time it tries to get out, the whole economy falls out of bed. You could even have a situation, as I predicted once before, that they try maintain the ruse of raising rates and stabilizing their balance sheets while printing QE, which is a bit like pouring petrol on one end of the fire and spilling some water on the other end of the fire. But just to try and maintain the impression we aren't stepping back from our commitment to solid economic interest rate environment, etc., etc., but petrified of killing it, they'll be releasing more money. In fact, people will cease to know about QE. They were big, we're doing this much, we're doing it then. It's going to become an ongoing thing. It's going to become an ongoing thing, kind of like the height of the euro crisis, which we were in, kind of like a number of the aspects that were occurring with the Greek crisis. They are all just going to continue to proliferate new money. So this is where we're at. This is the new world that we're in. And I can say to you certainly that this is not a good place for asset prices, especially when we're at cyclical all-time asset prices high. Now, people will keep buying the dip and keep being right for a while, and they'll keep putting the genie in the bottle for a bit. But as we get deeper into those aging boomers, then there will be a bear market, and it will just keep coming. Like the bull has kept pumping, people say that's a bottom. The amount of people who are going to get caught out calling finally a bottom. I went through this with Japan after the Nikkei hit over just about 40,000. The amount of people calling bottoms at 6,000, 7,000, then it went up and then it came back down and then it hit 12,000 and came back down. The amount of false dawns for the Nikkei with this low demographic, low growth rate, low number of children, and this massive aging population. We have a perfect model for it. Now, it's lazy to just say US now equals, US in the future equals exactly that of Japan now. There are also differences. But fundamentally, the key points will be an absolute moon of the debt. Watch the Real Vision. He's got lots of great charts in it. I'll post the link in there. So what does this all mean? Apart from sounding pretty depressing, it seems like you should have been ready and born in the boomers so that you had 3 or 4 major bubbles to cash out and get plenty of assets to make sure you had a good retirement. And if you're in a generation behind them like I am, you might be quite resentful with the debt bomb they've left behind for us all. Well, it's all the central banker cartel and the control structure. So they've engineered this situation, and they'll continue to attempt to manage it. So what you will continue to have is governments will buy the share market. That's right. As shares start getting cheaper, they'll try hold up and manage assets. Now, I've spoken about the oligarchical control structure and technological surveillance communism that is our future. And this is exactly where we are, where government will eventually own everything. They're going to be owning housing. We've seen, I've done one about Vitalik's great idea about how we should all just be renters and owning a house is selfish and all of this nonsense. Government will then be the homeowner of last resort. We'll all be tenants having rental extraction and tertiary extraction out of us in our own homes. Hence this interest in low cost self-owned park homes, which could be a great way. If you're low on funds, you can do them up quite nice, go by the sea, rent a plot for a very low amount of money and actually have a pretty decent retirement. It could even be attractive. But there are going to be a lot of sub-economic versions, and it's going to feel a bit grimy. So we're getting this concept that government will be the buyer of last resort of all things to try and manage asset prices. So while they will fall and come off, they will be buying all the way down, and then will become some of the biggest shareholders in listed companies. Japan has done that, buying their equities because they were getting so cheap. No one can hold it. Everyone has to retire and sell and live off that proceeds. It's not paying enough of earnings on it. They need to now put it in bonds or something, but the bonds aren't paying enough interest in Japan. You're going to end up with all of these things. The government keeping the debt market up or trying to hold it up, trying to keep the equity market up, printing all this money, and essentially government purchasing all aspects of private industry. And we've had it already in the Eurozone with the people talking about actual buying the debt of Porsche and Audi and all these vehicles. So German companies are now bondholders in private companies already. So we're already heading towards that. Germany, terrible demographics. Sweden, terrible demographics. Wonder why? The control structures, wars in Libya and Syria have had the main immigrants piped into Germany and Sweden because they're the two worst in Europe for personal demographics. They're not having enough babies. Germany is exceedingly negative. So what do? You create a war, and instead of it being the women and children that are coming over, it's all from teenage to young men through to 35, 40-year-old men that are coming over for work and integrating. And also, it has this multiculturalism that is all part of the open society, and it's to get birth rates up. That's it. It's social engineering by design. And you're going to have the same thing that is going on in the US, because now as the big pig in the python does start moving away, and it's a whole bunch of old people that don't want to die, and population control, etc., they're not falling fast enough. Some of them have looked after their health. It's not enough people to pay them. Pay for their upkeep. You might get these immigrants that start arriving in America to fill up the void behind the pig in the python, so that it is more uniform instead of thin bump. And this is the engineering. So, but within all of this, the government recognizes this is going to happen, and the assets, it's first going to have to become chronic before they get away with being this buyer of last resort, which means it's going to at some point become a shorter's market for just about every asset that is tradable. You need to have an opportunity and the wisdom to recognize that the game will flex. It will take a pivot. And we're getting not too far away from this point. We're at all-time extremes of interest rates, valuations, liquidity pumps. The consumption has got to go down. Old people that are retired live on 60% of the money. You stop buying stuff. You don't need a motorbike to run around. You don't need as much petrol. You don't need as much food when you're old. You want your coffee and your slippers so that you can shuffle around your little park home. That's what you need. And a little bit of sunshine on your flaky legs and your medical. That's it. It comes down to that. Where before you had a family, you had kids, you were doing all of these things. Life stage cycle. So what's going to happen is a lot of the crappier businesses are going to hit the wall. They're going to go bust. It's not enough spending to sustain some of the more marginal businesses. Shorting will be the game. Weak candidates can be identified and they can be shorted to zero. Even the strong will fall. Amazon gave outlook that says, hey, we just aren't going to sell as much, on the long haul about this. And that brought them back quite chronically. So, and that's a very successful business. So there will be opportunities to trade to the short side without knowing which market, without having the mindset to do this. And you're going to need more than just understanding what a head and shoulders, a double top, and a bear flag is. You need a real method that can sustain you. You could actually, during this period that could be very benign and stagnant for asset prices, be making a lot of money. But you need to learn how to short. Go and watch this Real Vision vid on the demographics. Get some of the numbers. The point came through well. It's well narrated. It's Harry Dent stuff. It's Raol that does the presentation. It's key about demographics. And the thing that came through to me is I'm looking forward to shorting the market, and I know how I'll do it. I'm already looking where the weak guns will be. We know some weak car makers might fall out of bed. Think of the ones that took credit. During the boom and bust of 2008, Ford supposedly was the only one to have survived without, although I think that's a fake story too. But I can certainly pick some US car makers that I would look forward to shorting, whose volumes will go down, whose dealership numbers will close, and the financialization of everything will also reduce. So it's going to be very interesting. If you are recognizing this and you want to help get your freedom, the 5 freedoms that I talk about: freedom of time, freedom of activity, freedom of association, freedom of location and place, travel, trade from anywhere in the world. If you're interested in that and you recognize that actually this cyclical evening could make very profitable short trading, some of my fastest profits have been made in short trading, you can come and attend our webinar tomorrow, 31st of October it is, and you can book on our website at the Get Started. This is my message. Be aware of what's coming. An assets deflation through America the government will try counterattack in its journey to owning so much of everything in this communistic, oligarchical, technological state where government is everything. And long may the day come when we get back our liberty and our freedom and get government out of everything that it has got sprawled into. But I fear that's a long way off. And in the meantime, we have to look after ourselves. We have to feed our families, and the short traders will have their day. Okay, I'm Francis, the market sniper, the crypto sniper, and the reset sniper. Hope you enjoyed the clip. Watch this. I popped a link in the bottom. It captures the demographics. You don't have to watch the entire thing. You can put it on double speed, triple speed, but get to some of the numbers. Get a feeling of how it is and why it will be, and how demographics says so much about what assets prices will do. Okay, bye for now and speak to you soon.